Welcome back to Author's Note. Alchemists for centuries tried to transform lead into gold without much success. Recently, financial markets have also had a stab at it, but with somewhat better results. Big punts by hedge funds have helped send the price of the heavy metal up almost a quarter since its June lows. This means lead has even outperformed gold over that period. Metals traders expect the price appreciation to continue in the coming months. Jack Farchy, the FT's commodity correspondent, is here to explain lead's recent momentum and discuss whether it can last. Jack, thank you so much for being here today.
Thank you.
If we bring up our first chart, it shows the performance of lead versus aluminium, copper, tin since early July. It's pretty stark, this outperformance by lead. What's been driving it?
Well, as you can see, lead's been on a roll for the last few months, and it's a market that it has become a favourite of all the hedge funds, the trading houses. Everyone really likes lead at the moment, which is fairly remarkable for a commodity that certainly we at the FT and also most of the analysts in the city and in New York and around the world pay very little attention to. It's a pretty small market, it's fairly niche, and in general people have been quite happily ignoring it. And then suddenly in the last few months, lead has become interesting, and it's outperformed, as you can see, all the other major metals. In fact, it's outperformed gold as well. So in some sense, financial markets really have turned lead into gold, in one sense at least. And the reason really is that lead demand, on the one hand, is seen as being fairly recession-proof. Lead is used in batteries, quite a lot of it in car batteries, and you need to replace your car battery when it fails, whether or not you're in a recession. It doesn't really matter whether people are building skyscrapers or not, you still need to replace your car battery. In addition to that, the market's had a bit of a short-term boost from Hurricane Sandy, because you've seen suddenly people across the east coast of the US rushing out to buy generators, replacing car batteries that have failed, and that's given not an enormous boost, but a little short-term boost to the market.
Yeah, we can see that with the second chart here showing the scrap prices. That's pretty significant as well. Is it just a shortage of scrap now?
Well, this is the other side of the story, is the supply, which an awful lot of it in the lead market. This is true across metals markets, and especially in the last 10 years as prices have risen a lot, scrap has become an increasingly important part of the market. For lead, scrap is a huge part of the market. It's well over half of supply of lead is coming from old batteries that are being recycled. And what you can see here is that the price of lead scrap batteries, at least relative to the price of refined lead, has been rising very sharply and in fact spiked earlier this year. The reason is that we've had a very mild winter last year, and that meant that far fewer cars failed, and car batteries failed, which meant that far fewer batteries were scrapped. Supply's fallen quite a lot, and so price has gone up a lot, and that means that lead supply has come down, squeezing the lead market.
I guess, the weather gods will have to decide whether we have another mild winter this year. But what about the future? Can lead, like you say, it's been sort of the ignored metal for so long. Can it continue on with the supply dynamics going forward the next few years then? Well,
there's certainly a story there for those who want to...
Let's bring up our third chart here and we can see it.
There's certainly a longer term story as well, which is, so I said that scrap is a very important part of the market. Well, there is still a primary mine supply for lead. And as you can see here, that's increasing quite a lot this year. This is in percentage terms for mine production. But look out to 2015, 2016, and the outlook for mine supply of lead and also zinc, because lead and zinc tend to be mined together, looks quite a lot more worrying, potentially, and not very strong. And so you could see, certainly Wood Mackenzie, who comes up with these numbers and is one of the most closely watched consultants in the market, expects lead prices to rise, well over 50% in the next few years. The other part of the story is China, which is the most important producer of lead, even from mines, and people are looking at China, especially now as the new leadership comes in, to see whether there will be some kind of environmental crackdown on the small-scale artisanal mine production of lead in China, with lead obviously being quite toxic. If that happens, then there could be a very significant bullish effect on the lead market.
Well, Jack, thank you so much for being here today.
Thank you.
Well, it seems like all roads lead to Beijing again, as it does for so many commodities. But given the long-term supply dynamics, it's unlikely that lead will drop like a Zeppelin anytime soon.